Hey traders, John Howell here. Today in this coaching video for you, I've got three major things that I want to cover with you today. And that is firstly, obviously the title of this video, why I see the second coming inflation spike is going to send gold to 10,000. I'm going to walk you through the numbers, the history, and why this is just history repeating itself. But first, there's something you need to be cautious of when it comes to gold going to 10,000. I want to share that with you. Also, I want to share with you the one indicator that I use that's free for all platforms that helps me to stay away from low probability trades, but also helps me get into helps me find good timing of trades, right? So the timing of that. And also I want to share with you my number one type of trading pattern that I look for throughout the entire market. There's one pattern out there that I really like to trade. So there's actually a lot of things I want to go through in today's coaching video, so let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so before I do get started into it, let me actually share something with you. For you guys that are we're halfway through the year right now, and I want to start off with this quote here, guys, just to really sort of help you guys out with your own trading, because I know trading can be hard, right? It can be difficult. Not only do you have to worry about the actual market itself, but then your emotions get involved in the fear and the greed and the FOMO and all that sort of stuff. It's actually quite a difficult process, right? So I understand where you're at right now. So this is for you. If you never give up, good luck will find you. When we grow and change, we get better results. But going through that change and growth is hard and painful. So with your trading right now, becoming a really good trader, you're gonna go through some roadblocks, right? That's just the journey. The journey towards becoming good at anything, right, is like that. It's like breaking through glass ceiling. It's going to hurt and you're going to get cut. You realize your habits need to change. The way you're thinking is wrong and you need a big reality check, right? So right now, you're halfway through the year. I don't know how long you've been trading for, but only you can actually look back over time and say, do I need to change my habits? Do I need to change the way that I'm thinking about my trading? Do I need to change the way that I'm actually trading these markets? Do I need to increase some discipline? Am I being patient enough, right? Really dig deep and understand. On the other side of all of that digging deep, guess what? You start to get on the other side and you start to get much better results, right? Because that's the way that you actually grow. I can go down a rabbit hole here, but because most people think it's going to be easy, right? I'm no doubt about you. Most people think, trading's going to be easy, especially right now with a big, massive bull market. People are like, trading's easy, John. It's like, when they feel this pain, they stop and retreat. So many people out there that I see that are going through trading right now that do trade, they think it's easy, right? Now it can be easy, but the hard thing is that you get in your own way, right? Like with the way that I trade, and I teach you for free in that free trading course, link in description, or you can join my coaching program if you want. If you actually want more coaching, you can apply for that, link in description there, where I'm with you every single day. And by the way, I'm actually closing down that coaching program because it's the last spots there. But the thing is about this is that you're going to hit some roadblocks, right? You're going to hit some roadblocks out there. But those who say, yep, change is hard, it's painful, and it's not meant to be easy, and this uncomfortable feeling is a normal part of me going through another level. You're going to hit some roadblocks. It's going to be tough. It's going to be hard. You're going to feel like quitting. You're going to feel like giving up, right? So don't quit. Don't stop. You are on your way. And when you don't quit, good luck will find you. You're building momentum and you're closer to the dreams than you think. Just like the water well and the pump, and nothing comes out for a while, right? So you pump the water, guess what? But when you don't stop, after a while, you get it. So please do not stop. Trading is an amazing thing. And my first, probably say 5 years now, I've been trading markets for 20 years. And my first 5 years, was what? My first 5 years was $250,000 in debt. And I had to move in with my mother and father-in-law. And my father-in-law said, trading's not for you, John. Why don't you become a manager at a fast food restaurant? because trading is obviously not for you. You've been doing this thing for 5 years and all you got to show for it is, $250,000 in the hole. Think about that, right? If I'm $250,000 in debt, I've got to make $400,000 to $500,000 now just to get back to break even. Why? Because I've got to pay my taxes, right? So I've got to make $400,000 to $500,000, pay my taxes, and then pay the debt. So I was almost $500,000 just to get back to break even, right? And thankfully I became a really good trader. Thankfully I made all that money back through trading. And that's the reason why, I know where you are right now, right? I was doing the stupid mistakes. I was doing the dumb mistakes. And that's what my entire coaching program is all about, right? Because I've been through all that stupid dumbass mistakes throughout there. And because I've been mentored by some really incredible people, and if you do need some help, guys, then fill out that application. That's that second link in the description, and you can join me, and I'll be there every single day, right? Showing you, don't do this, control this, all that sort of stuff. So that's what I wanted to start with there. Now, let's get into the good old, obviously, the gold part of this video. Now, one thing that for me personally, I'm always looking for. If I'm going to be doing some investments in the markets, right? Which, by the way, guys, you don't need to do investments, right? You don't need to do investments. You don't need to buy and hold, right? You can really learn the skill of trading. And when you learn the skill of trading, which I'm going to get to later in this video about my #1 trading pattern, I'm going to share that with you here, right? For free on the good old YouTubes to help you out, right? Here's the thing. You don't need to trade the markets, right? For you guys that just buying, holding, and letting go, you can learn the skill of trading, right? And full-time trading, guys, put it this way, full-time trading for me is half an hour a day, right? Yes, it takes a bit of time. It might take a good 6 to 12 months to get to that point of knowing what to look for, what to do, how to be patient, how to say there's no trades today and get up and go, right? But all my trading is done in half an hour per day. Meaning I'm looking, scanning, placing, and managing positions, right? Half an hour per day. So that's full-time trading for me. So I don't believe in doing full-time trading for me. My results literally skyrocketed when I went from trading 10 hours a day, trading all these markets, to trading half an hour per day. Now, yes, I do spend a lot more time on the markets, outside the markets, because I just love looking at the charts. Anyway, so that's what I want to share with you. You don't actually have to buy and hold, right, and do this. But for you guys that are investments in gold, this is actually for you, right? So look at this here. Check this out. So every time in history, whenever we do get inflation problems, right? So because this history repeats itself, right? Just similar things happen, and you can just see it coming, right? But unfortunately, what do most people do? Most people are saying, "Oh, John, look at this pen. Look at that pen right there." And I'm like, no, look what's behind the pen. The camera. What's the camera? The big picture, right? The big picture. What is the big picture? The big picture is what's going on, right? So unfortunately, so many people are focused on now or what the Fed's doing right now, and when there's big, massive cycles that are at play that happen over years and years and years, right? We know, what is one of those cycles? There's booms and bust cycles, right? We know that, right? We go through booms right now. We're going through bust coming soon, right? Which is on the caveat of what I'm about to say here. By the way, I might as well touch on that right now. I'm about to say why I believe gold is going to hit 10,000. Yes, but for you, Joel, for you been messaging me, right? Where I believe gold in the stock market and so on and so forth. This is where I believe gold's going to go to. But initially, Joel, I believe everything is going to get crushed in the next recession. I could be wrong. Right? So don't shoot the messenger. You take your own risk, right? But I do believe that over the next 1 to 2 years, we're going to go through a really, really, really big crash. And because to think about it, right, the really big crash is the thing that's going to cause gold to go through this move. Why? Because they're going to do this massive amount of QE again, and that's going to be their last one. Why? Because people are not going to be buying the debt. People are selling the debt overseas, so it's coming. Everything's coming home to roost. And then guess what? People are going to flee the dollar and they're going to run to gold. So that's a big picture there of why I see that. But on inflationary times, we can see here that's an inflationary problem through there. in the 40s and in the 70s. And every time we actually got in inflationary problems, we had inflationary spike 1 and inflationary spike 2. Inflationary spike 1, inflationary spike 2. Notice every time the second spike, right, the second spike, whenever we have had inflationary problems, the second spike is always higher. So if I'm doing my calculations properly, guess what? What caused the inflationary spike, right? Is what? Massive pressure in the markets, right? So that's probably what's going to happen again. They're going to do another massive round of QE, and they're going to push it, right? And then guess what? We're going to probably see another second spike here. So that's what I see what's happening there. Now, if I'm looking now on the back of that, if you go back and look at times, now I can't actually, this is actually the charts through here. This is silver, right? This is the silver price. Look what happened with the silver price. For some reason, my gold chart won't just go back there, right? I don't know. For you guys that use TradingView, this is TradingView. Why won't gold go back that far? Let me bring up the G or D. G or D go back that far? No, it just won't, will it? Anyway, so what happened with gold is pretty much what happened with silver, right? Look at silver. Silver went absolutely just bonkers, didn't it? And by the way, for you guys that know my sort of trading style, what is this through here? All right, for you guys have been following me for a while, what is this called? This is called what? An energy building phase, right? Look at all that. Look at all that, many years. What is that? How many years is that? How many years did it go sideways? What's that? 1, 2, 3, 4, 5, 6 years of sideways movement. No wonder it went crazy, right? Anyway, energy building phase, guys. I'm telling you right now, the energy building phase is the number one thing you should be focusing on for big moves. Anyway, just go check out the gold. Go check out the gold chart before the big move that happened at the start of this year, and you'll see exactly what I mean here, right? You start to see these patterns, right? Go. Anyway, so that's what happened with silver. Big spike up, big spike down. Yes. Okay. Cool. All right. So when it comes to the gold price, that's what happened when we went to you know what? Let's do this. All right. So I've just gone to this website here. This is the chart right here, right? So you can see what actually happened. See what actually happened in the 1970s, right? We went from, you can see here, we actually went from, what is that? We went from about 100 in the 1970s towards the 1980s. We went up to around about 800 from there, right? So you see this big, massive move from there. If I go back to, let's actually go back and yeah, right. So you can see that's that big spike from there, right? So I do see that happening again, right? Second spike is going to cause that. Now, what's also going to cause the gold that's going to go? What's also going to cause gold to actually do that is that when the government has no more room to run after this big massive QE, and the reason why they're going to do a big massive QE is because of recession, and in that recession, gold, silver, stock market is going to get crushed, right? So for you guys that are buying, holding right now for the next couple of years, over the next couple of years, the stock market's going to get crushed. Now, I'm not saying now, like that may not start until next year, right? So you do what you do. For you guys that have been messaging me, right? You do what you do. You do you, boo-boo, right? I've always, if I'm going to be buying, holding something, I always have my plan in place. And I understand these driven cycles. So over the next couple of years, I see everything getting crushed by 50% or more. Gold, silver, stocks, mining sector by more. But then on the other side of that, guess what? Massive QE, which causes the inflation spike, which causes another thing that happened like the 70s. And then on the back of that, guess what? Now there's going to be massive debt defaults because no one wants to buy the debt. People are selling the debt. And they can't afford to pay it. Defaults, people rush to gold. Okay? So that's why, in a nutshell, of why I see this gold chart. Where are we? Right? This is the silver chart here, right? But this is the reason why I see the gold chart on why I see gold going to 10,000. There's a ribbon, there's a cycle here there, guys. But just understand how we're going to get there. I believe we're going to see that price later this decade, right? But we're going to go through a big dip first, I truly believe. So looking at the actual gold price right now, right? Let's actually go. Look at that there, right? Anyway, so look, this is the gold price right now. I do believe we've got probably a bit more upside to go in gold, and it may last for the rest of this year. Maybe the stock market and that is going to be very, very strong this year, and then maybe 2025. I don't know exactly how that's going to play out there, but right now we're in a very big, strong bull market right now in gold. So the charts are telling me that we should get another leg to the upside in gold. But just mark my words, guys. Whenever that top does start to come into play in the stock market, which is not yet, in gold and silver, which is not yet, everything will get crushed. So if you guys are just buying, holding, hoping because you've been doing really well, it's capitalizing this big bull market on every single market out there, just have some stops in place. That's all I say. Have stops in place. So if everything does start to come down, lock in profit. That's all I say. Do not get greedy. Lock in some profit. That's all I do say. Because the worst thing you want to do is you always look at the worst case scenario. The worst case scenario is everything does start to come down over the next couple of months, and we really start to see a big bit. Who knows? The top could be in right now, and the bear market starts. You don't put any stops in place, and you turn a really big profitable position into a really, and that's the worst case scenario, right? I'd rather you be out wishing you were in than being in and seeing a massive profit now turn into a loss because you just got greedy. Lock in at least some profit there if you're buying and holding there. But if you're doing it more for the long term, then let's actually just check out. Well, let's actually see when it comes to that there, guys. Just understand what's going on right now. We're probably going to see some more upside, but we're definitely going to get a very big drop here, and that's the reason why I see gold actually having a really big boom, but on the second half of this decade, right? That's probably that really big move out of gold. I truly see it's going to happen probably on the second half of this decade. So maybe 2026, 2027. That's when I see things really getting heated up. And by the 2030 period, I believe looking back after 2030, we would experience a really big bull market. But initially, guys, I believe everything is going to get crushed. So if you can't handle that, especially if you guys that are trading leveraged instruments, right? That means you're going to be leveraged, right? So if something goes down by 50%, your leverage instrument is going to go down a lot, right? So just be prepared for that in the next crash and the next recession. So that's the gold part of this video, guys, that I wanted to share with you. Now I want to get on to the other topics I promised you at the start of this video, and that is the number one free indicator you can use right now to help you when it comes to finding really good entry points in the market, and that is a simple moving average. See, here's the thing, guys. A lot of the traders, the thing is when I'm trading myself, I always want to be getting in on the next move, right? On the next move. So how does the overall markets actually work, right? How do they actually work, right? They go through swings, they go through phases, right? So I'm looking at gold right now. This is a gold chart, and I have a 52 moving average. Is it simple, John? Is it exponential? Who cares? It's simple, right? It's just a simple moving average. John, why 52? Because my mentor used it. John, why didn't you use 50? You can use 50. John, can you use 60? Use 60 if you want, right? It's just a simple moving average, right? But the thing behind this, what I'm sharing with you right now, is where the rubber hits the road, right? This is where it gets really awesome. See, for me personally, I want to be getting in on the probability of having the next move in that direction, right? In the next move. Unfortunately, the uneducated and most amateur traders, what do? Is that they wait for them. So how does the market actually work, right? Let's actually think about this, how the actual market works. And this is all markets, right? All markets, right? So I had someone on my videos the other day saying, it was the other day or a while ago at least, saying John's trying to do technical analysis on the crypto market. You can do technical analysis on any market, because who do you think's trading these things, right? The same humans and robots are trading all markets. So therefore they're going to make the same type of patterns. right? We know that. Anyway, so looking at how the markets work, how do the markets work, right? We go through these swings and phases, right? We go up, we go down, we go up, we go sideways, we go up, right? So we go through these, that's a bull market there, right? Or if it it can go down, up, down, sideways, and down, right? So bull market, bear market, we understand that. Unfortunately, what the uneducated does and do, and you'll be able to see in the next section when I talk about my number one trading pattern, why this is so powerful on the back of what I'm saying here, is by utilizing the moving average, is that most amateurs, the reason why they lose money is because a lot of people have this herd mentality. They want to see everyone else in there first, then let's go. You do that in the markets, you're dead. You want to get in there when no one's getting in there. Because guess what? When no one wants to get in there, that's when it's a good time to get in there. But then when everyone is in there, guess what? Now you want to evacuate and get out of there. Now, the herd mentality is also like these swings, right? So what happens is that after a while, when the market goes through these bull markets through here, these bull moves through here, what ends up happening through here is that they wait for the price to rise, and now they go, oh my goodness, the market's rising. I better get in now before I miss out on the next big move. And then they get in up here, not knowing how the markets actually work. And that means after a period of time of going through a phase in the markets, and it doesn't matter what market you look at, it's going to come a period of time where you're going to get this correction, a pullback, a counter trend to what I call a refueling phase, right? We have to refuel it. This is a refueling phase to go for the next leg up. This is a refueling phase getting ready for the next leg up. So unfortunately, because so many people in this world have this herd mentality, right? I want to see so many people doing it first and then I'm going to do it. You do that, you're gone, right? You're dead. You're dead. So the professionals like myself, what do? I am waiting for not everyone to get in there. I'm waiting for this correction. I'm waiting for the pullback. I'm waiting for the reset. I'm waiting for the refueling phase, the correction, and I'm getting in here. I'm getting in just here before we see the next leg up, right? I want to get in there. That's where you want to get into the markets there. So the thing for me is that I'm always looking for the identification of where is the market right now. Should I be in? Should I be out? If I'm looking for a good trade, remember this is trading, guys, right? I'm looking to get in and hold for a couple of days, maybe for a week, maybe even if it's a longer term trade, I might be in it for a month or two, right? So that's the type of, I have two different types of trades. Level one for me is more like I'm probably going to be in it for maybe a week or two. And then level two is more like, if it is a successful trade level number two, then I'm probably going to be in it for a couple of months, and it's going to be a really big profit. So that's the type of trades I look for. So, but on the back of what I just said there, guess what? Now, when I'm actually trading the markets, I'm looking for these points here. So, and the same for the downtrend, right? Same for when we have this downtrend through here. So many people will wait to short it. And as it's been going down, after a while, then people want to come in and short it. This is why people will lose money in the stock market and trading in general, because they wait for the market to do its thing, go either up or down first. But even if it's in a downward trend, we're going to sell it. It's going to go down. And then inevitably, we're going to go through these counter trends, these whipsaws, right? These periods in time in the markets where we're refueling. So what you want to do is you want to wait for these refueling phases and then try to get in here. Try to get in here, right? Not after it's done that. So the reason why I brought that up in today's video is because if we look at how the markets actually work, even by looking at this gold chart right now, just bring up gold as an example, but with all markets, you'll notice that the reason why I use a moving average is for two reasons why I'm looking for the moving average. I'm trying to see, are we far away from it, or are we close to it? That's the two reasons. Firstly, are we away from it? Are we close to it? If we're away from it, that tells me we're too far away from it, because you can see inevitably what ends up happening, right? We end up coming back to downtrends, uptrends, downtrends. We might go through a big move, but inevitably what? We come back to it. So when I'm looking at this indicator here, this one moving average, when it comes to the elastic band, right? When the market pulls to, if this is the moving average through here, actually let's do that again. Do that again, John. But nicer. There we go. Right? That's actually, and then now I'm going to bring up a good old black. Where's the black there, right? So if the market gets too far away, guess what? We're inevitably going to come and have a snapback and then continue up, right? So it's like elastic band effect. So whenever we get in a uptrend, whenever we get too far away from the moving average, this is now a caution bell to say, don't be going to do what you want to do. So if you look at if this market's in a downward trend, yes, it's in a downward trend, and we want to trend is your friend until the end. Yes. But what you want to be looking for good entry points, right? So trying to short it after it's gone down, wait for the reset, right? And then go down. Wait for the reset and then go down. See what I'm saying? And even in a very big bull market, where we are right now with gold, look what happened. Or not right now with gold, should I say. Look what happened back here, right? We went up for a while, and we never really got what? The correction. Up. And then we started to change to trend again, right? So that's why trading is always monitoring the trend. Are we changing trend, or are we continuing the trend? And that's trend analysis. But looking at this level here, to me, if we get too far away, if I see we've been making a very strong move up, like here, and we get too far away from it, inevitably we're going to go through one of these phases. This is expected here, right? You're going to expect this. This is the reason why I got out of my gold position, because I expected a period of time where it just had this correction, a pullback. I knew it was coming. So for you guys that will follow me at the start of the year, I took this trade, but I knew inevitably the market's going to go through one of these phases again, right? Which is one of these rebuilding phases. And then eventually it's going to have enough time to refuel to get going again, right? So to me, I'm always looking to take trades. And the reason I'm always looking to take trades when the market's right around the moving average. Because if we get too far away, either up or down, guess what? It's likely to come back to it, right? So for me, so right now through here, this is when I actually traded gold here. One of the reasons I did trade gold through there, utilizing this technique, was what? I utilized this technique in order, because I knew, guess what? Firstly, we've gone through a correction, a sideways phase, which is a rebuilding phase. And secondly, we're right near the moving average. So that told me that, guess what? Now's a really good time to be looking to get at this, because we're coming off a refueling phase or a counter trend. And also we're right near the moving average. But then obviously also we have these other rules in place, like trend analysis and going with the trend. And because the trend was, as you can see, the trend was up through here. So I was going with the trend and all that sort of stuff. But this section here of this video here, guys, is all about making much better smart decisions by understanding how the markets work. This is how markets work. So when you're in a position like I was, getting ready to get out, because you go, okay, this is what's happening here, right? And so this whole period through here, guys, is all about helping you utilize this here to stop you from getting into bad trades. Because if we're too far away from the moving average, it's a bad time to be getting into it, because we're likely, there's a big probability we're going to start to see that correction, either up or down. That's going to bring it back to the actual moving average. Alrighty, traders, so let's actually continue now. So what I want to do is I want to share with you my number one type of trading pattern that I like to use in the markets, and that is what I call my L-shaped pattern with the moving average, right? So the 52 moving average, let's bring this up through here. So this is a screenshot of, I got, as you can see, all these different screenshots here. Look at this here. So if I go, these are the screenshots I've taken this year of trades and so on and so forth of what I'm about to share with you, right? So let me bring this down to here. As you can see, this one here is 311. I've taken 311 screenshots of roughly the same type of setups that I'm about to share with you right now. So what am I looking for? I am looking for basically this here. This is the bullish scenario. Now remember the moving average, right? Remember the moving average I just shared with you, right? Well, if you don't remember that, what I'm looking for is this blue line here is the 52 moving average. So what I'm looking for really is I'm looking for an L, in this case, actually I'll use this one first, right? I'm looking for an L-shaped pattern, and the L-shaped pattern must be going to a strong trending moving average. Now this is the bearish example here. So I know this sounds really, really simple, guys, but as the market's moving and doing its things, and you've got your ascending and descending triangle patterns and this and that and heads and shoulders and engulfing candles and so on and so forth, and the market's doing its thing, it's going up and down, like, to me, I'm just like, I'm looking for my pattern. That's all I'm looking for, guys, right? So as I'm scanning the market, guess what? I'm looking for my pattern. So this is the basis of what I'm looking for in a really high quality setup. Now, what am I looking for here? Let's actually bring up a yellow. Firstly, I'm looking for what? Down and across. See how it's an L shape, right? See, I'm going down, and then I'm looking for a cross. And I'm looking for a cross, but I'm looking for a cross with a strong moving average. Got that? So I'm looking for an L-shaped pattern in the markets where it's gone down a lot, and then it's gone down strong, sideways to a strong moving average. The L-shaped pattern to a strong 52. And then I'm looking for a large bar here to tell me we're getting ready to start that next move. Make sense? So it's like, it's as simple as that. It doesn't have to be that complicated, right? The only issue is that these setups don't come around that often, right? But for those who have the mentality of I need to trade a lot to make a lot of money, you guys know that you actually end up blowing up your account with that mentality. You guys know that. You know that, right? If you haven't, then you know that. It's like, yeah, it's just not. So if I just look at this as an example of trades, right, of things that happen, just look at even some of the crypto market from here, right? This is something I was sharing with my private clients recently. What is this? This is what? This is Ethereum right now. What is Ethereum? Ethereum is doing what? Right? Ethereum is doing what? We have down. See the L shape? L shape to the 52. And then we have this breakout bar, breaking below this support level there. See that through there? Now, this is my number one type of trading pattern I'm looking for, right? This is level number one. And then the level number two is when we get really, really, really funky, where we start to use this with some other time frames to look for some really big moves, right? So that's the setup there. So this would be the entry right here. Why? Well, as I said before, right? What am I looking for? I'm looking for this pattern here, right? Down across to a strong moving average. What do we have here? Down across to a strong moving average. And guess what? The market has a nice move down. So as you can see, right, now again, full trading is like getting in here, getting out here, right? The same for Bitcoin. Bitcoin did the exact same thing. Look at this here. What is this? This is this, right? This is this. Strong down, slow across, and then a breakdown bar. Look at this here. Down, across. What do we have? Down, down, across, a breakout bar. With what? With a strong moving average. I wonder where this is going. Nice, successful what? Nice, successful trade. And then it actually did it again too. Right? Did it again through here. But the moving average actually started flattening out here. So this is where the moving average flattened out. But the moving average did flatten out. The moving average was quite strong here. But this is the number one type of trading pattern, guys, I'm looking for. Right? And it works for bullish and it works for bearish, right? This is also the bullish scenario. It's flipped upside down. The exact same thing. It just means I'm looking for the upside down L-shaped pattern to a strong moving average and a breakout bar, right? Let me show you some examples here of trades. I could pick any really, but let me actually, there's a screenshot here that I got that has got like many different examples on there. And I want to share that with you here. This is the stuff that I do with my private clients. Because every day, guys, with my actual private clients, again, you can apply for that second link in the description. For the last half an hour of the US market, I'm doing my trading. So you see what I'm doing my trading. And then after that, we spend sometimes up to an hour, sometimes 2 hours, going over this stuff that I'm doing right now every single day. So it's more like a coaching session from there. I'm just looking for that. There's a screenshot that I put together that's got all the different, this one right here, right? So look at this here. It's just, these are all different types of markets, by the way, guys. All different types of markets. What do we have here? Down, across, this here, and a strong moving average. Enter there, and a nice successful trade. Not a big trade, but guess what trade? Trading's not like that. Trading's not all about making really, really big profits, right? Now, if you do want to make a really big profit, you understand that that's a level 2 type of trade. I'm teaching you level number 1. Level 2 is when you really, really get to know the stuff that I'm teaching here, right? But it's the foundation of what I'm looking for. That's the reason why the moving average comes into play. Up, sideways, strong moving average, breakout bar, move. Down, across, large bar. Down, across, strong 52, large bar, big move down. Up, across. Now, by the way, guys, these markets through here, strong move, it's same, right? What is it? It's all the same thing. And so whether you're doing that or whether you're doing like even the short, like these are like daily charts through here, I'm pretty sure. But even if you started looking at like now, when I started to look at say the hourly time frame for me personally, I like to use. Oh, by the way, guys, this is the number one pattern here that happens at every single stock market crash. Like there's a rhyme or reason of what you start to see in at the tops. And I went back through all the different big crashes from here. I can teach you that later on, but bit of a tease there, guys. 1929 crash, 1987, 1962, 08, etc., etc. And every single one of these had something on the chart that says that we're now likely to. No one knew it was going to go into a crash, but we're now likely to go through that downtrend. So it's really, really, really important. Again, this is the stuff that I do with my private clients. But today's video is all about the L-shaped pattern, right? The L-shaped pattern. I'm trying to find, where is that? Here, right? So this is the same type of thing, right? So if you're trading, say, the hourly charts, I always teach my clients to use a 24 when trading hourly charts. But what is this? The exact same thing, right? The exact same thing. Up, sideways, large bar, big move. Up, sideways, strong moving average, large bar, big move. Up, sideways, strong moving average, large bar. Up, sideways, strong moving average, up, sideways. Look at all these successful trades, right? So again, this is the foundation of what I teach. Is saying, look at this here, up, sideways, strong moving average, large bar, nice move up, sideways, strong. You get what I'm trying to say here, right, guys? So this whole thing here, guys, is just to teach you that you guys are notice there's not even any of these indicators on here. There's no stochastics, RSIs, MACDs, and there's none of that. For you guys that are way overcomplicated, this is what's made me so successful in trading, guys. And why you need to join my coaching program so I can simplify the process for you, get you focused on the right important things, and get you on the right map. Second link in the description there, guys. You need to apply for that, right? Because if you're struggling right now and you're using all these whiz-bang magic tools, right, of the Elliott waves and A, B, C, Ds, and then the stochastics, and then the RSIs, I've just showed you example after example after example after example after example of how this works. The big problem is that you need patience waiting for that next good setup. This is the reason why, guys, I have such a big high win-loss ratio when my setup appears. Now, I don't always have a high win-loss ratio. Sometimes I have a low win-loss ratio. Why? Because I take some bullshit trades. I'm just like, I'm so impatient, and then I take some bullshit trades, and then it doesn't have a success there. So anyway, traders, I hope you really enjoyed this whole session through here. Again, guys, if you really do need some help, I'm actually about to close down my coaching program for the rest of this year. So if you really do want to join that and be able to see what I'm doing, because the way that it works is that you not only do you get access to my entire educational program that teach you this setup here, but then for the last half an hour of the US market, you'll be able to see what I'm doing live in the markets. When the market closes, I spend half an hour. Like the other day, I spent 2 hours doing exactly what I'm doing right now for you here, but I spent 2 hours going deep, looking at the charts. And then not only that, but then looking at setups that are happening right now that I got what? The beautiful L-shaped pattern. All we need is a good breakout, and away we go from there. So anyway, traders, hope this helped you out. Speak to you guys soon.